The earnings report was much more positive than expected. They beat EPS by $1 and beat on revenue. Comparable sales were up 20% above the estimates, and gross margins rose 80 basis points. So a lot of positives for this. They were talking about how their online sales and business is strong even during COVID, and they were happy about that. And that's a major reason for this gap up. This top left chart shows the 5-minute chart with this gap up from about $163 to $168.30 as the high in the pre-market. And we'll be watching how this reacts off the open, how it pulls into a major support level at this 164.50 from the pre-market, and how we really hold there and then turn around to the upside. So we'll mention this had 50 times R vol on this day off the open, which is something very attractive for us. The higher the R vol, the higher chance that we have an outsized move to either direction for outsized risk to reward, and that's a really big reason why this is a name in play alongside the gap up and strong earnings. So we'll play it from the market open here, opening up at around $165 and like 50 cents, kind of on this support level, which we've been playing around in the pre-market. First minute is pretty slow, takes some time for volume to come in, might be a slightly delayed open.
Yeah, this did take a minute or two to open up.
So yeah, we'll just show the first minute or two on the tape here to show how it kind of works its way down into the next support level at 164.50.
You guys are a little bit more advanced. What you mean by that is it's taking a couple minutes for the specialist to open up the stock. So it's 9:30, but it's still not trading at full capacity.
Exactly. The majority of the volume that can come in hasn't really gone through yet from those bigger desks or fund managers.
And if this was a NASDAQ stock, you wouldn't have to check that. The order flow would just come right in at its highest peak starting at 9:30. But when you're trading a New York Stock Exchange listed stock, sometimes it doesn't quite open at 9:30 on the dot. It takes the specialist a little bit longer to figure out how to match some orders for the opening and balance. And after that, then they're ready to rock and roll.
Especially on a day like this where we're doing so much more volume than they're used to pairing on the open.
Good point. Good point, Houston. That is one thing you want to check, though. If you're looking for an opening drive trade and you're in a New York Stock Exchange listed stock, you do want to make sure it's actually open. There are some times when you think it's open and it goes down 50 cents and it's not quite open and you're reacting to that 50-cent down move, but the volume's not there. So you are in jeopardy of a quick snapback that surprises you because it's not really open, or worse, a snapback or worse. So
absolutely,
great. For the newest guys, make sure the stock's open first.
Yep, and that's why you'll see I don't really take a trade in this until the volume comes in, and I'm sure that this is getting ready to trade.
And I'm sorry, the way you tell that is NYSE will come in on the bid and the offer, and also you'll just see the prints going a lot faster in the box.
Exactly. So we'll see the first major pull in here to 164.50, where I'll have a quick entry when it pulls into that level, really respects it and snaps back quickly. So we have the NYSE orders in there now. Definitely more volume going through.
If you want,
we can see right here we're coming into the 164.50, and we never even get below that level. The bids hold right at 55 cents, can't break down, start to move back up 20 cents, and this is what gets me long at this 164.80. There's a lot of variables in my mind here. Strong gap up in the pre-market. We did hold most of the gap. Strong earnings. Dip and rip setup has been very common recently, and just knowing that since that support level was respected so quickly and so well, once it was open and the volume came in, it really gave me good confidence to hold this for a move to the upside, risking that 164.50 level. And you'll see here, I'm putting in my hard stop at 164.42, so if we get a flush under that 50 level, I'll take it all off there. But otherwise, kind of holding this, thinking we can get a move back to 167, kind of this mid pre-market range, take profits into there, and then see if this can really trend to new highs.
Hey, Matt, how'd you come up with 42 cents?
So 42 cents was a little bit arbitrary in the sense that 164.55 held, but I often know on these opening drives that they'll test a little bit above and below levels to get out the weak hands, especially when it's moving more volatile on the open. So I often like to give myself just a little bit more room over that level and see if we really kind of hold below that level, because if we just wick through 55 to like 50 and then come back and then there's buyers, that's good. But if we really get under that 50 cents, by like at least like 8 cents, I got 10 cents, then the trade's kind of over to me. I just want to give myself that little bit more room because this type of trade can have such outsized risk to reward, risking like 30 or 30, 40, 50 cents looking for 4, 5, 6 points. So I think giving yourself that little bit of wiggle room over the major level you saw can be important in these opening 5 minutes. So now we'll see how we hold this 165 level and come to 166 or 165.50, where we kind of broke down from in the morning and we're holding. And you can just see this is such a change of character, how quickly this is breaking out to the upside. Volume's coming in, large 1-minute candle. This is telling you there were real buyers down there. This isn't just like a quick move up to test the level. This is a real strong open with buying coming in, offers getting taken out, bids constantly holding higher and respecting these pre-market levels. So you can see I sold 25%, and a 166.28, so kind of just over this 166.50 level, which I knew was minor resistance. Cover some profits in, as these opening drives can come back rather quickly. Like here, we've already come back about a point from that breakout. But I still thinking the same thing with my stop. Maybe make it a little tighter under 165 now, which I'm updating to 164.93. Kind of thinking, all right, get a little tighter. I don't. If it breaks back down to 164.50, that's looking way too weak. I don't need to sit through that. And 165 did kind of hold from the major breakout.
And let me butt in here and say that another change in character we see with this setup is one, getting over the opening price when we rip back up. That's a place where I usually get in or add to my position. And then two, the spread tightens up a ridiculous amount, and that shows you that, the trade is really starting to come on in a big way. Earlier in the trade, towards the bottom of the range, the spread is like 40, 35 cents. But then when we're really accelerating, that spread tightens up to 10, 15 cents, which in a stock like this can be dramatic.
Yeah, that's a really good point. That's definitely an indicator of strength and another check in our favor when the spread's tightening up as it moves in that direction, showing there's definitely more orders getting involved now. So this trade's going to take a little bit of time to play out. I'll skip ahead here soon in terms of just watching the pullback, seeing if we still hold higher and don't break below that morning low, which is where we're really giving it to. So as we skip ahead a little, we can see that pull in really held. Then we come to this previous resistance, hold, and then break higher. So I still have 2/3 my position on, and right there I sold another 1/4, getting me down to a half my position. Sold at 168.12, knowing this 168 was kind of a level in the pre-market respected here.
Question for you. At any time, after the bottom, after you see the dip part of the dip and rip, so it pulls in and you see the bottom from that move. After that's put in, do you see at a higher level an opportunity to add to your position or put on a little bit more risk, or that's not part of this type of trade for you?
So I definitely think the ad spot for me would have been the first major pullback after we broke to 166.50 when we really pulled back, and this 165.50 started to support. We clearly held higher after a major breakout, and then we start to pick back up to the upside on a little bit of lower volume before an explosive move. So I think this support level, which we kind of noted and kind of reclaimed a little bit, could have been an area to add. But on these trades, I'm definitely more comfortable just going for more aggressive price targets and not always adding, but definitely knowing these can have really large moves. So giving myself that potential with still having half my shares over this new all-time high, as this 168, 168.30 in the pre-market was the new all-time high of the stock. So here we're just going to keep watching how this kind of breakout develops. Like I said, we're often going to pull back under these important levels after a breakout through them, especially when we're at new all-time highs in a stock. They need to develop the price levels and support levels. And it takes a little bit longer to do that when there isn't clear technical chart levels. So watching the tape is pretty important on these breakouts and noticing how it's reacting after a breakout. How far is it usually pulling back? What type of speed is it pulling back on? Am I getting a change of character in that sense on the tape? Maybe that's a reason to trim. In this case, I really think this is holding well again. Gets under this 168, which we broke out from. Can't really hold below. Some bidders are still getting involved there, and we're starting to chop around that level. So that's giving me confidence to hold the second half of my shares to see if we can really keep trending the upside. I mean, at all-time highs on 12 times RVOL still, this is a great candidate to keep moving on the day.
Yeah, I want to point something out in terms of psychology. Always good to think about who's on the other side of the trade. So your second yellow line show in the pre-market. So if we look in the pre-market, your second yellow line.
This one at 167.42. Okay, this was the prior all-time high coming into the day as well.
And then so you see at 8:30, we start to roll over from that support, right?
Yep, right here.
All right. So when we roll over from that support, momentum day traders are going to do what?
They're going to get short that level.
They're going to get short. That's a short pattern. They're going to say maybe the stock's up too much. It should pull in a little bit. I'm going to get short. It's not holding these higher support levels, and that's different than what it had been doing in the pre-market. And then so it goes down, has a nice pull in, and then it pops back up to like that a little bit around that 167 area, but below that 167.50 area, and it makes a what?
It makes a top.
Looking at the pre-market, it makes a lower high, right? From that. So there are some more people. So when people see that lower high, what are they doing?
They're getting short again.
They're getting short.
Yeah, into the breakdown or into the pop as well.
Yep. And then you're seeing, and then you see the stock make actually a new low right when we open up, right?
Yep.
And so there are people doing what?
There are people hitting the momentum short there, probably through the lows.
Yeah. And so there are three areas where momentum traders are short. And so when you pop back up towards that 167 area, and then you start to go back up again, you're getting the people who shorted the lower high out. And then when you get that move back up towards 167.50 and get above there, you're getting people to start to think that the momentum is not to the downside anymore. So you just always want to be thinking in the back of your head, hey, is the momentum on a short-term basis as an active trader, is it down or is it up? And you want to be cognizant of it's not down anymore, because we need something new for people to think it's going to be down. It made new highs. It got above previous resistance areas. And again, these are very short-term charts. but that intraday momentum is not as bearish for these people anymore. Does that make sense?
Agreed. Yeah, and I like to use the 5 minute chart as well personally to try and get that bigger picture idea, which is my top left chart here. And we can see that once we break out and then we're really holding higher on the 5 minute over the night or 21 EMA and VWAP, it's definitely looking a little better from a longer term as well.
100%. And I think that when you're trading, and we're trading right on the open, we're looking at shorter time frames. And then as the day goes on, what a lot of really good traders do is they start to look at longer term charts. So on the open, some people might even trade a tick chart.
Right.
Some people may look at a 1 minute chart right on the open. And then in the same stock, they may say, well, after 10:30, I'm not obviously making opening drive plays anymore. Maybe I'm going to start to look for some swing trades. I'm going to go to a different section of my playbook. For that, I'm going to look at a 5 minute chart, a 15 minute chart to see where we are with those.
Agreed. And I often trade on a little bit shorter of a time frame as the morning session up to 11 a.m. is my strongest trading hours. So I definitely am working on talking with guys that trade later in the day in my class and kind of seeing how they're developing longer term chart patterns, interpreting volume and kind of interpreting the technicals for the longer term. So that's definitely a reason why I have this hourly chart up here in the 5 minute. As the day goes on, I'm trying to think a little bigger picture. Where
your results are best right on the open?
Yes, the first half hour is my best results by far so far. So
and you're going to want a different playbook for different time periods. So the way we're going to trade in the first 45 minutes of the day is not how we're going to trade after 10:30 or after 11. We're going to, yeah, so good. Good to notice that.
Great. So I'll skip ahead now to where I actually do get stopped out of this trade for the second leg, as the pullback's just not really what I was hoping for. It's a little steeper here. Start holding below this prior all-time high. Like I said, I trade a little shorter term. So I was kind of watching this purple line. You can barely see it over the blue one there, but that's my 21 EMA on the 5 minute. And I like to use that as we get to this like 9:50, 10 o'clock area for leaving on a potential trend in my shares. And so soon here we are going to wick below that level at 166.43 and kind of stop me out there. As you can see, it's kind of a harsh pullback, not quite what I was expecting. And then I'll have one more move that really stops out a lot of weak longs. And you can see this wick right back down 166.50 and it rebids. So I was glad I was out before this because this would have stopped me out regardless. But I want to show the power of sticking with this trade or sticking with the stock and looking at the higher time frame and really what you could have captured on the second leg here, as these wicks could have been potential re-ads or when you see it hold higher here. And then we are going to break out to another new all-time high after a pretty steep pullback. But you can see on the 5 minute, never really did break back through that pre-market low or anything of that nature, and it was somewhat of a higher low. So yeah, that really shows there was another 2, 3, almost 4 points left on the table. As this one even higher on the day, I believe. So yeah, it kind of shows how I'm using the 1 minute charts, and sometimes you get stopped out a little earlier, but it also keeps your risk a bit tighter, and then trying to identify the larger time frame trade is now what I'm working on, and that's why I didn't quite take this trade, as I know I'm a little weaker in it, and I want to watch how they develop more. And this one, just these pullbacks are a little too harsh for me to really have confidence to get back in again. So yeah, that's mostly what we have for you. Earnings to all-time highs and a strong name, a strong sector in terms of online sales during COVID, and then the clear buying in the tape off pre-market levels, leading to pretty strong move to the upside.
I mean, who doesn't love to go to Target?
Exactly. They got a little bit of everything there.
Hey, go ahead and click. Okay, so for my first playbook, I playbooked a 60-minute gap fade on GME. This trade was executed on 1/7/2022. And let's get into it. For my trade strategy, I'm looking for a catalyst that gaps the stock up over 5%. In this case, the catalyst was that they were having an NFT release. I want sentiment not to be in favor of breakouts or follow through in the general market. And I'm going to use a 1 minute opening range trade to take my entry, and my stop will go, the stop goes at the high day. I'm going to use VWAP as an area to add to my position or to move my stop to break even. And I'm looking for a pickup in volume on open as institutions sell into the gap.
All right, so Alex, so when you say sentiment not in favor of breakouts or follow through, why are you saying that?
I want I want the breadth to be more deteriorating for this process, because I mean, if the market is following through, you don't really want to be fading a gap if it's getting follow through, and because it could be a breakaway gap. So you want to have a lot of situational awareness for this play, and you want to know that the breadth of the market is deteriorating. That you just want to really be paying attention to the general market and know when these plays work.
I don't know that others who are listening right now know what you mean by the breadth of the market is deteriorating. Do you mean we're in a bearish market?
For me, how I gauge that is I'm looking at what percentage of stocks are above their 20-day moving average, what percentage are above the 50-day, 200-day, and if we're seeing that number go down over time, then the breadth is deteriorating in the market.
Okay, and you're seeing that?
Yes, and so during this time, I was seeing that. I was seeing a lot of those numbers going down during this time. You look at fundamental behaviors of the stock. GME is a thin stock that fundamentally makes no sense and is overvalued. And at this time, press releases are being faded with no follow through. Institutional ownership and short flow had decreased over the last 6 months, and we ideally want the short flow to be under 20%, and we ideally want the institutional ownership to be under 50%. And also during this time, meme stocks have not been in place since January of 2021, and they're in their down cycle under their key moving averages. So for the entry positioning, I want to go full size.
I think what you're saying is a good trade strategy is to look for things that are gapping up because the overall market is weak, bearish, and the stocks that are gapping up are not as likely in this market to follow through. I think you're saying that.
Yes. And I'm looking for institutions to use this as an opportunity to unload their supply. And that's essentially what I'm trying to take advantage of.
Yeah, but I think you're saying something else. I think you're also saying that it's true that in this market, things that gap up are less likely to follow through, but it's also true that GME, which is a meme stock, is following a pattern, is in a tranche of stocks that are also, in of themselves, not likely to follow through when they're gapping up. Is that fair?
Yes, completely agree.
Okay, so what you're saying here is when we get something that gaps up and is also a meme stock, that's going to get us super interested to think about fading it because we're not seeing follow through with those particular types of stocks in this particular type of market.
Exactly. We're noticing that theme and we're trying to capture that.
Good, and I want to make this point. So during our 11 o'clock meeting today, we talked about how important it is to pick the right stocks. If you pick the right stock, you're really good with stock selection. You actually don't even have to trade that well. Choosing your stocks is in of itself a way to generate some edge. If you're in something like a Tesla today and you trade it on the short side, you don't have to be that good. If you're in something like IWM today and you're trading it on the short side, you don't have to be that good. If you're in something like GE today or GM today and you find some resistance area and you trade it on the short side, you don't have to be that good. If on the open you were trading Netflix from the long side, you don't have to be that good. And so super important to be picking the right stocks. But it's also super important, and people a lot of times talk about trading psychology and they think they're getting in the way of their success. And we sort of say, well, trading psychology comes into play when you're a little bit more mature in your career and it's more towards making more and being your top trader, being your best trader. And probably not the reason why a lot of developing traders aren't doing as well as they'd like to at the beginning. But you're pointing out, and I want to point this out to you and to others, you're actually pointing out something that has edge. What you're talking about here is not just a trade idea. It's not just an opinion. This is something that has worked. This is something that has worked for a long period of time. This is something that's going to continue to work. This is a really good job of pointing out a pattern that has edge in of itself. And you traded the right stock to trade, which in of itself has edge, and you're trading a pattern, which also has edge. And if you just sort of stick to the right stocks and picking patterns that can have edge, again, you don't really have to trade that well. And so very good job by you picking a good pattern and picking a good stock. And I just want to say one more thing about the bearish tenor of the market. So Thursday after the close, we had a meeting with all of our traders and we said the market has changed. We had been saying that for a long period of time, but we really pounded the table even more on this idea. And what we're seeing in marketplaces, this isn't our opinion, this is just what we're seeing. What we're seeing in marketplaces is extreme weakness. We were as weak as I've seen the market be in a really long period of time at the beginning of this week. I have not seen tick be that consistently low, that consistently negative, negative 1200, negative 1400 into the close after we had traded down almost 8 to 10%. I have not seen that in a long period of time. And there may be a lot of people out there that are buying pull-ins. That's not working. There may be a lot of people out there playing bounces. That's not going to work most of the time. You got to really be careful about when you're actually going to get into your bounce trades. And we've been talking to the desk about being super selective on the long side and leaning short when you're actually seeing some weakness. Because for the market we're in right now, and this is the market we're in right now, the market we're in right now is bearish. The market right now that we're in, the big players are concerned about the Fed. They're concerned that the Fed is too hawkish, that they really are not concerned about stocks, that they're mostly concerned about inflation, and that inflation is going up, and they're going to do what they can to curb inflation so that doesn't get out of control. The market right now is concerned with, and this is related, the supply constraints. We saw Tesla release earnings today, which were pretty good, but they're saying we can't do as well as we want because we can't get the materials we need to build more cars. We're going to look after the close to see if Apple says anything about the supply constraints in their earnings release. We're concerned right now about Russia and Ukraine. That needs to sort itself out. We're concerned about energy prices. That's a little bit related to Russia and Ukraine. We've been concerned about COVID for a little bit. That seems to be waning. But we've got all of these things that the market is overall interested in. The most important thing is inflation. The most important thing is how the Fed has signaled and will signal how it's going to cut or curb inflation, how it's going to curb the impact of inflation on the economy. And this is different than the prior years when we were in an uptrending market. The market is different. The Fed is signaling that it is going to react differently. The Fed had been dovish. The Fed is now hawkish. Inflation is now a concern. It didn't used to be. And it seems as if inflation is lasting longer than we thought at the beginning. This is a central problem driving the marketplace. And all of our work, all of our patterns, all that we do here needs to start from that big picture. And it is possible tomorrow that we enter a new market and this bearish market ends. That's very unlikely. But we're going to need to see improvement on the Fed being so hawkish. We're going to need to see improvement on inflation. We're going to need to see improvement on our supply constraints. We're going to need to see improvement in Russia and Ukraine. And until we see that, right now, all we're seeing is a bearish market that wants to trade lower. And so you're trading in that market and you're finding a pattern that really fits nicely into the construct of that overall market, into that big picture of that overall market, which is, let me find something that's gapping up that shouldn't have gapped up this much, and let me lean on it to the short side and make a pattern trade in a bearish market in a stock that probably doesn't have very good fundamentals overall, and see what happens. So you're doing a great job with your stock selection. You're doing a really good job with your pattern selection, and all of that's matching the market structure, the market bearishness that we're seeing right now. All right, let's see what you got.
Yeah, thank you very much. So now we'll talk about entry positioning. Personally, I take full size right away on 1 minute opening range breakdown since I'm only looking for a quick one leg trade to add cash flow to my book. You can add to the position on loss of VWAP with a stop above, but you really want to be reading the tape if you're doing that. You use 1 minute opening range break high or high of pre-market to manage your risk. You do not want to risk more than 30% of your daily stop, since if it works against you, you don't want to risk your whole daily stop right away and lose that in a couple minutes into open. This is a play I use to generate cash flow to hold on to my high conviction swings. If you want to keep 10 to 20% of the position for a runner, that is totally okay. And then sale positioning. I'm looking to take profits into the high of the previous day. If the high of the previous day is not hit, then I kind of want to take my profits within the first 60 minutes and move on and not waste too much time on that name. And then also I'm looking to sell the position if my stop is hit, whether that's the high of the pre-market, the high of the opening range trade, or if VWAP is recaptured and it builds above VWAP. The intraday fundamentals on GME, the daily volume on this day was 12,137,000. The average volume at that time was 4,249,000. So this is 285% relative volume. The average true range at GME on that time was 15. The short float was 13%, which is down from what it was before. And the institutional ownership is 28%, which is also down. Those are two things you want to see. And the VIX at this time was at 19.9. So reasons to sell. So profit taking, like I talked about, I like to call this a 60-minute gap fade. So I want to be out after 60 minutes. You can take profits at the high of the previous day, or if you have a different price target and it reaches there. Reasons to sell, risk reduction. If the high of the pre-market is hit and stops you out, if the high of the day on the opening range trade is hit and stops you out, if you moved your stop to break even after VWAP was lost, and you scratch after the stock regains and builds above VWAP, or if you see an unusual buyer in the tape, maybe you see volume dry up and you see an unusual buyer, that could also be a sign to cover your short. Okay, now looking at bigger picture, because I think this is really important. So bigger picture during this time, the SPY was range bound, but it wasn't just range bound because breakouts were being sold into. Like Mike talked about earlier, the Fed was turning hawkish at the end of QE and a raising rate environment. I think that QE ending is very, like the Fed reducing the balance sheet is very important towards like your situational awareness of the market and what types of plays you want to be looking for. And also meme stocks have not been in place since last January and are in their down cycle. I also noted that gaps have been used for bigger players to sell into during this bigger picture time. So then if we look at the weekly, you can see GME entered its down cycle on the weekly chart on November 29th on the weekly time frame. You can also see that the gap is into a declining 10-day moving average, which is a great spot to fade. Then if we look on the daily, you can see the daily enters its down cycle on November 26th. I'm noticing a lot of these unfilled gaps as subtle signs of supply and subtle signs that there's very little demand for the stock. Some levels I'm looking at on the daily that I highlighted is 164 is the high of pre-market, 160.40 is the high of the 1 minute opening range break, 157.62 is support after not being able to hold above VWAP, and then some take profit zones at 143.29 60 minutes into the session, and another take profit zone at the high of the previous day. So on the 15 minute, you can notice that GME gaps up 33% in 45 minutes, but it was only done on 632,000 shares after its press release. You can see that it sells off on 2.9 million shares in the first 45 minutes in the session, which is a big pickup in volume compared to the move up. You want to really manage your risk against the high of pre-market or the high of that opening range trade, and you want to protect break even once price rejects and pushes off VWAP. And then again, I noted the areas that I'm looking to take profits in at the high of the previous day or after 60 minutes into the session. Here on the 1 minute, you can really see. So on the 1 minute, you can see the 1 minute opening range break trade triggers 3 minutes into the session at 155.76. When the low of the first candle is breached, stops go to high of day. At 9:45, there was an unfilled gap and a pickup in volume as we push off of VWAP. And to me, this is like, you can kind of see it. It's smaller, but you can see that there's an unfilled gap at VWAP, and that's showing you there's a sign of excessive supply. And that's a key to either move your stop up or you can add to the position there. I think it's a good time to add to because your range. If you set a tight stop there, your range is pretty tight. Your risk reward levels are pretty good. And I think that's just really key to note. You can also see that we're pushing out VWAP. We're not really even getting close to VWAP or being able to touch it. And I noted the take profit zones on here. And last thing I want to notice is you can see on the first 1 minute, big players are selling straight into the gap as the theme continues. And then trade management, I just same 1 minute chart, but I would add size on the unfilled gap at VWAP loss, and I'm looking to lock in gains after the first hour of the session.
So we were talking with some of the guys during our chat this morning. How would you describe this chart?
Distribution.
How would you judge your stock selection?
I think my stock selection was really good. I do have one thing that I don't like about this chart. I think the 1 minute opening range trade, I think the range on that 1 minute opening range trade is pretty wide. That's the only thing I don't like about my stock selection. But I think the fact that I'm picking, I'm seeing the deteriorate, I'm having situational awareness to see the deterioration in the market and to, move off plays that aren't really working anymore and to try to move towards the plays that are working.
GMEs can do that a little bit, right? But after it starts to go towards VWAP and starts to fail, if you look at the chart there, I mean, what would you say about it?
I would say that there's an even better chance to add size when it's failing under that VWAP in that really tight range. That you get even a better chance to add size than on the opening range trade. Because on the opening range trade, you're not really going to be able to press it that much with that wide of a range. But on that unfilled gap at VWAP, I think you could probably press it a little more because it's such a tight range.
Sometimes I feel like I need to communicate better. Kurt, we keep talking about this. But,
Sorry about that.
What I'm trying to tell you right here is you've done a good job picking a stock. What I'm trying to do is tell you you've done a good job picking a pattern because you don't see a chart like that very often. I mean, it's very weak. There's steady selling in it. It's a beautiful staircase, stepping lower chart. That tells you you've done a good job with your stock selection. You want to go back and say to yourself, hey, why did I do such a good job picking the stock? Why did I do such a good job picking this pattern? This is the type of pattern you can make a lot of money trading at. I know this is only your second week as an intern at the firm, but you can make a lot of money trading this pattern. And we want you to do more of that. Does that make sense?
Oh, yeah, totally. Thank you. So then, what did I learn from this trade? I learned that fading gaps, that gap up over 5% on news, can be a great play for your playbook while the market is not following through or is in a downtrend. I put fading gaps can give you great risk-reward levels to work off of. Fading gaps can provide quick one-leg trades that pay fast and provide cash flow for your swings. What could I have worked on better? I said, looking back, I could have kept 10 to 20% of the position as a runner, as GME looks like it's going much lower with the overvaluation. The 1 minute opening range trade break had an ATR of 4.55. This is not optimal at all and makes the position size a lot smaller. And I could have added once I saw a big jump up in relative volume on open. All I had to do was wait for GME to have a gap under VWAP, and that would have been the perfect spot to step in with size, and that's something I didn't do. And you can see in these pictures, I highlighted, in the top left, I highlighted that unfilled gap where it was losing VWAP, and I just think that is a big sign that a big seller is stepping in there, and they don't even care to fill that gap. They just want to sell it down.
Yeah, you're totally on the right track here. This is really good to look at. And you can then take steps further, which is you can find stocks aren't just going to gap up and fail right away and be as easy as this one. There's another pattern which can be a really good short as well. DKNG, you saw this this week in it. DKNG got upgraded, had a push to the upside, blew out the shorts, and then rolled over, had a rollover pattern after it was just up way too much intraday, not sustainable prices intraday. And so you can look for that rollover pattern. Gaps up, really vertical to the upside, not at a sustainable price, rollover pattern, and you can start to make that into a short as well. That's on the same track as to what you're doing right here, and might be the next logical pattern for you to be looking at that's comparable to this.
Awesome.
So have you learned anything in 2 weeks?
Oh, I've learned so much. I'm like in heaven.
All right, good. So we'll be much harder on you next time.
Okay.
But good stuff. No, really, seriously, great stock selection, great pattern. Good job observing a pattern that has edge. That's what it's all.
Graham will get us kicked off talking about this opening drive trade in Overstock.
Yeah, so like Matt mentioned, this is an opening drive trade. As is almost always the case, we're going to be looking for a stock that's in play. Trading RVOL over at least 2 is almost always an imperative. So we're looking for a strong after hours or pre-market gap up, but still holding below significant support or an inflection area for us to trade off of. But for these gap ups, we're looking for them to be somewhat extreme, so at least 3% or more, so that we can know that the stock has some downside and can really see some relief before it maybe tries to make a leg upwards. So in this case, the gap is really extreme. OSTK seeing a 15% gap up. That's definitely going to get our attention as we go into the open. We want to see a strong pre-market level to risk off of, and it helps if it's a psychological level somewhat. So if it's a round number, a very clean number like 70 in OSTK, which is a historical level as well as a level that was developing in the pre-market, gives us something to risk off of that we can really define clearly.
A better level than your psychological level is a level where there's a lot of volume being done. A level that was tested a lot of times. A level where they fought and somebody won, and we see that, and other traders can see that, so that it's clear that if it gets above or below this level, that there's going to be people who need to exit. So I like the idea that you point out a psychological level. I would prefer and encourage you to think about the levels where significant volume was done, where there were significant tests, and where lots of people knew that if it got above or below this level, that the stock was going to move in a certain direction. That's the key. Where was their volume done? What are the significant levels dictated by volume? So think about that.
Definitely. And I want to clarify that $70 is the level that it had a lot of volume done multiple times in the pre-market. So it just worked out that the psychological part of it being $70 in combination with us seeing a lot of volume done at $70.
Yeah, so I like when you're thinking about your variables then to say that.
We should be more clear saying if it's a psychological level or that we really saw that level with volume, which we did.
It's definitely the ideas in conjunction. You certainly don't want to pick a level out of thin air just because it's round. But for the criteria on the open, we're looking to see a breakdown while holding below the pre-market high on extreme volume. And so, as is always important, you really want to know what trade you're about to hop into, and this is an opening drive trade. So the nature of these trades is that they should work quickly. They work very quick. So you should be in the money quickly or getting out. And so at the open, when you're getting in, you want to see a lack of buying and preferably a lot of the volume being done on the bid versus on the offer. This just tells us that in this stock, sellers are more eager to get into positions than buyers are. And so when we're looking to get our entry, we want to see this weakness. Preferably, we can find an important level, such as the 70 level, or some level on the tape that shows itself where the bids are trying to put up a fight. There's a held bid, but it's starting to decrement, and offers are really stacking up and starting to press up against it. And so we would be looking to get into our first tier once we see the stock clearly hold below the pre-market resistance level. And in this case, it's that $70 level in OSTK. And once we get that tier in, we're looking to see if we can add a second tier. We're looking to add that if we see a bounce in the name and a hold below that resistance level. There's going to be less risk on this tier as the price we're going to be in probably is going to give a slightly worse risk reward, and the opening drive idea is still in the process of confirmation, so we don't want to jump the gun and pile in with the less desirable price entry. But one thing we're really looking for on this bounce is relatively less volume with respect to the sell-off that we see at the open. This just tells us that even though there are perhaps some shorts covering or buyers stepping in at these lower prices, they're really not as eager, and the market in general is less convinced that this can see highs. And so a good part about this trade is that there's a fairly easy level for us to risk off of. We have that $70 that we're basing the trade off of. So if we see that give out and us rip higher, we can just immediately cut our loss.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window. So don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So market context, we'll talk about this a bit more later, but we're at this point in the market really just kind of range bound and inside. We're towards the highs of range since the sell-off, but no decisive movement at the moment. And then VIX, even though it's not like the post-crash environment, we are still in an elevated VIX environment. We're going to see a lot of volatility on the opens. So for the bigger picture, SPY has been consolidating for about 2 weeks at post-crash highs at this point, just kind of ranging between 320 and I think that should say 322. And so the inside nature of the overall market, it's often going to reduce the likelihood of true trending and the likelihood that we're going to see follow through in these changing fundamentals ideas. That means that for large gap ups, we're more likely to see big market participants taking profits at the open and seeing a bit of a sell-off. We're just less likely to see these things gap up extremely and then just continue ripping upwards on the open. It's not an impossibility, but it's more likely that we are to see a little bit of downside and breathing before we see further upside. And so for a bigger picture for crypto, we had been in a historically low volatility period in Bitcoin and all of crypto from May through the middle of June. But then we had recently seen a spike in Bitcoin, which took it to 10-month highs. And along with it, we saw a massive influx of volume, volatility, and liquidity in the space. And since OSTK is partially a blockchain company, a lot of investors and traders as well have started to shift their attention onto the stock, increasing the volatility. I remember last summer when I was on the desk, Bitcoin also had a run, and OSTK really started to run with it. And a lot of traders were starting to put their attention on it as well during that period. So whenever crypto is in play, we're also going to be looking at OSTK.
Definitely. Having the combination of earnings and Bitcoin being in play for OSTK gave it a lot of catalysts and a lot of conviction there could be a good opening drive there.
Yeah, and just a really high chance that we're going to see a lot of market participants. So as for the actual earnings, fairly strong for OSTK. Their Q2 results, their EPS estimates of 84 cents were crushed. They hit 107. And they also beat on revenue by 102 million for a total of 782.54 million on the quarter. And this marked a massive increase of 109% growth year over year. So, and this is partially due to its blockchain ventures. Again, having that crypto in tandem with it is helpful for this trade. And also on top of this, gross profit margin grew by 312 basis points to 23%. And the CEO just talked about the earnings while they were happening, saying the number of new customers has tripled year over year. Importantly, our customers are buying our core products, so the home furnishing from the safety of their homes as the country's new normal.
Hey, how would you characterize these earnings?
Very strong.
Yeah, in particular, the earnings, when margins increase, that's particularly strong, and they're doing well in a high growth area, which lends well for the stock. And now you're thinking about shorting it, so you got to keep that in mind. This better be a really good short. These levels better be really, really terrific. The stock better be really extended for me to be thinking about being short, or else I really want to be focusing on pull-ins.
One thing for earnings or for a trade like this is, since we know it may be counter trend to the earnings news, which is very positive, we're going to be a little more defensive and taking profits a little bit more quickly as the trade works in our favor, and not try and push as much size as maybe we would if there was really negative earnings in combination with a really clear short.
Yeah, 100%. The gap up's got to be way too much. The stock on the daily chart or the stock on the daily chart's got to be really far away from where it would even trade if it was really strong. The level that you're looking for to trade off needs to be real good. You being able to control your risk needs to be very high. 100%, great point that you made. Terrific point, excellent point, fabulous point, amazing point, spot on point. This is not something we're shorting and holding. This is something we're shorting and we're taking profits into. This is not something we're shorting and going for lunch and for a swim at the gym. The gyms aren't open these days. Or going for a long walk or meeting our significant other out for a long lunch or having a siesta. This is a 2 hands on the steering wheel trade. And when we see first signs of strength or we see rules that we developed to take trades off, we're going to do that.
Exactly. Yeah, very, very quick in and out trade just to see some profit taking on the open in a name that we think is extended on the daily and extended intraday with the gap up, but with some very strong news. So just intraday fundamentals, everything standard. We're seeing RVOL elevated and even more elevated at the actual open, and that ATR will give us some indication of how much we can expect to actually go for on the trade.
A good thing to note here too is the ATR of about $5 was almost 2 times ATRs made in pre-market before this trade. So it is extended about 2 ATRs before this short comes into place. But we're not thinking just directly in terms of ATRs because there are changing fundamentals going on here for the company as well. So that's not always indicative of the true size of the move you'll get on an earnings day like this.
Yeah, and so for more context, it's helpful to look at the daily chart here in OSDK. You see that around March, we saw a big sell-off where it hit lows. This is the exact same time where Bitcoin and a lot of the names in the cryptocurrency space had a bit of a flash crash and sell-off, and since then have been recovering, and OSDK, doubly so, has really just been running. So we see, and now just looking at the daily, it's fairly obvious that this thing is very extended. I'm not trying to jump in front of a steamroller here, but just could use some relief on the open, and that's all we're looking for.
Yeah, and we're so overextended at this point, and we don't quite have anywhere close to the volume we did on the initial breakout in like July-ish for when it really started going parabolic. So it's definitely another thought of maybe it's a little exhaustion up here. So to come into the pre-market technicals, as I said, we're up almost 10 points from the earnings release to the open. Started at about 63 and hit a high of 74. The 68 and 70 levels are going to be really important trading levels. The 70 you can see was tested many times. We tried to break out to there, had a pullback accumulated through 70, and then when we eventually were able to hold over 70, we got the breakout to the pre-market high at 74. Came back, had buyers in this area at 70. Quick flush out. Looks like, oh, maybe, this is weak, people don't want to buy it, and just gets accumulated back up over 70, but then it's holding lower into the market open. So I'm thinking, okay, we did finally flush through 70 on the most volume in the pre-market we'd seen. We'd broken out up over that level, so if we're going to be failing to hold
if I could just jump in. So when I look at that chart, I definitely see 70 as a point where the momentum could shift to the downside. There's two things I don't like about that chart. One is the range is kind of 70 to 72. So if we're going to hit this below 70, we're not really wrong that this can go down until it's actually above 72. We would be wrong for a momentum trade if it reclaimed 70, but for a swing trade, we're not really wrong until 72. And the other thing I don't like is that it got below 70, couldn't hold below there, came back above there, and wiggled around, which means that could that happen again? Could they take us below that 70 and rebid it up? So we want to be observing that when we're thinking about 70. But 70 definitely is the point. That's a good job that you've done here. 70 is the point where the momentum should shift from up to down based on looking at that pre-market chart.
Yes, and knowing that a momentum breakdown from 70 has to work quickly in our favor, and we had these wicks here, our first profit targets are definitely above $68, knowing that if they are going to rebid it there, that is somewhere we want to be taking profits 100%. So we'll go into the tape reading now for this trade so we can really see it more in depth. So this is right at the market open. You can see we're holding above this 70 level, some bids there, but it's kind of weak because we pulled right into 70 right before the market open. We were almost trading towards that 71 area. So I'm thinking if this can quickly give out on the open with momentum, there's potentially a momentum trade down into this 68 area, momentum short. Market open very soon. Here it is, and you can see as soon as it opens, we just get under 70 and start to flush on momentum. There's big bidder, there's big offer holding down at 70, so this would have to decrement or get taken out for us to get back over $70. So now I know this is really a good risk level when I know there's someone specifically trying to hold that area. And we can see the area holds. They don't even get decremented. And then we start to break down into the bottom of this range here. I have a 69.20s price, and like I said, covering some into $68, about 3/5, knowing, okay, I have about half my position out. I was expecting a move to 68, but I'm also expecting some buyers to come in here. Doesn't mean I can't continue to the downside, but I need to be wary that these opening drives can bounce back quickly, and I want to take profits at those areas I've seen volume before.
So Matt, did you hit the 70?
At 69.23, I tried to hit in on the momentum down when those 70 offers went away and it started moving down, away from that. So my short sell fill was 69.22, and then I covered some at 68.40 and 68.50 when we started to slow there. But I'm still in the trade. It's still looking pretty weak. A lot of volume did come in, did quickly break down, so covering more into $67, another 5th, as this is below this resistance area I was looking at, so I'm thinking this could maybe be an overextension now. We could get a bounce if some people are really trying to come in and support that 68 again. So down to only like 2/5 my shares here, just seeing if we can get some continued trend. So we're going to get our first bounce here.
I'm putting this one under the category of, look, I liked how you saw that 70 level, and I like that you were thinking about taking an opening drive, but where you hit in is not a good entry. It's way too far away. You can't control your risk doing that. We didn't really, all we sort of saw when we opened was the 70s get wiped out. We didn't really see it decrement. It just sort of like the first prints were below 70, and you really couldn't get it at a good price. And then, where are you going to cover that if it stopped going down right away? Were you going to be able to do that? It's spready as it is. It worked. This is an example of a trade that worked that you can't really get a lot of size in. It's too spotty. I don't think this was a particularly good opening drive play. You couldn't control your risk. So, if we had opened up and 70 had been buying and 70.15 had been selling, and 70 had been buying and 70.15 had been selling, and then it finally got below 70, and you could whack in at 95 cents or 98 cents or 93 cents, and you knew you were wrong if it got above 70 again and got above 70.16 again, maybe half of a cover above 70 and the other half above 70.16, then this would have been a good trade. But you've got so many things going against you. Number one, there really wasn't a lot of volume done at 70. Number two, it's not below 70 for a long period of time. Number three, I don't even know where you cover this thing if the momentum starts to shift to the upside. Number four, you've got a stock that has really good earnings. Number five, you've got a stock that has a history of being overly shorted and going up a ton to the upside. And so this is a pass. I mean, I'm not hitting the bids there at 69.22 unless I have more protection. I just don't have enough protection for this opening drive play. And if I don't have enough protection and I can't control my risk and I'm not sure what my risk is, then I can't put a good trade on, even if the damn thing makes money. And I know that I imagine this is going to work, but where are you going to cover that thing if you're wrong? If you hit 69.22 and that thing starts to tick up, where are you going to cover that? 70, 80?
I would try for 70. I have a stop just above 70, but
Were there even any? I don't even think there are really any offers there. When that thing starts to turn, I don't even think there are any offers there, particularly from the open. So when you're making an opening drive play, you have to say to yourself, I may be wrong. In fact, it's probably even better to say, I'm going to be wrong. If I'm wrong, how am I going to get out?
yeah, I guess I didn't think it would be that hard to get out at 70 in these
Run the
openings.
tape back. Run the tape back. Let's from the beginning. Run the tape back.
Yep. So it'll open in a second or two.
So there's an offer at 70.40. There's an offer at 70.60. 70 gets taken out. And there's a big offer at 70, isn't there? There's a big stop. So you hit it at. So you hit it, and so did you hit it yet? You did hit it.
I hit it in a second or two.
Well, play back the tape. I actually may stand. You may be right that it looks like you can get out at 70. So start it again.
Here you go.
Okay, stop. All right, play it. So you can see, stop. You can see there are some offers there at 70. And so when it gets below 70, some offers do come in there at 70. So your risk is you're probably going to have to either pay the offer at 70 or cover it above 70. So that your risk is 78 cents on this stock. That's a lot of risk, right? And you thought the stock could maybe go to 68, in front of 68 if you were lucky, right? So you're going to make, let's just call it, in fairness, let's call it 68.36 is maybe where it could go to. So you're risking 78 cents
For about a point.
for less than a point.
Yeah.
And so, that strikes me as a pass. Do you agree?
Yeah, I definitely think so.
Yeah, and I understand it's a trade, and you're going to have trades that you're going to be able to make hitting it below 70. And so, like the structure of the trade is good. It's just in this case, it didn't really allow you to get in where you can control your risk. And you always got to ask yourself, if I'm wrong, what is my risk going to be? And I know you do a good job of that. And I do like the fact that you were aggressive here, but the risk reward isn't good enough for an opening drive trade right here. All right, let's see that. Let's swap over to maybe that second part of the trade. So the first part is you hit it, it goes into 68ish, and you take it off. And then I think there's another trade where we want to see if it'll not go up much after the initial down move and short it again.
Exactly.
Can we skip to that?
Yep. That's about here. So we had that wash below 68 to 67s, covered some in there. Watching this bounce. And it bounces to like these 67.50s, but then they just kind of stops on the tape there and gives out another 50 cents back to 67. So before that breakdown through 67, I added some, so I was saying that 67.50s area kind of stuttered. We saw 67.50 then start quickly to give out, and I added 50 shares short at 67.45 while we were breaking down, and then that's about. So watch the first bounce, we try and hold only 67.50s, quickly gives out 20 cents. I add in short there, 67.45, and then we're below 67 now. So now I'm thinking the 66 area, 65.90, kind of where we broke out from pre-market could be a new target. But really I'm just layered out through the 60s. Try and cover some at 66.35, 66.15, a little under 66, 65.86, and just having those targets out there because I know this could just give us a quick extended move and close out the trade and that's kind of what happens here. My 65.86s get covered right below 66, and that fully closes the trade for me, as figuring there's going to need to take some time to bounce from here. We've gone through so many levels with on a trade where there were variables not.
All right, good. I like you layering. I like the way you did that. I would have saved at least some of it. You want to save at least some of it, at least a third,
Yeah.
to when the stock actually stops going down. So you take profits, you layer your bids in to take some covers, but you got to leave some for when the stock stops going down, because it could just spike all the way down to 63, and you don't want to give up 3 points just because you can't take all the profits until it actually shows you some strength. Hey, can you flip over to your last slide where you talk about your technology?
Yep.
So tell me how you use technology to help yourself with this trade.
So these are different filters that we have through our firm platform that give criteria to stocks based off whether they're potentially reversing, whether they're seeing momentum, and whether they could just be spiking. This is a really strong filter because you can use it pre-market to get trade ideas for stocks that are gapping up. And this morning of the trade, Overstock, the scores are relative to the other ones. So Overstock had like a score of 60 on the spike compared to everything else having like 10 or 15. And when you pull it up and then you can see the volume, you can look for the news, and it's just another really strong way to find in-play stocks that have outsized moves to get them on your radar. So then you can go from there and do the proper research, figure out the variables, the short float, ATR, RBAL, all that, and see if it really is worth trading. So these technology filters are just another engine to give us more ideas to see more opportunities in the market, really.
Okay, good. Good use of technology. Love that you put the tape in here. Challenge for you guys. Next time, come back with an opening drive play or a trade like this where you really can control your risk, where you really can, because that's going to be something you can sink your teeth into as you guys get more experience. You're new, you're developing traders. You want to be thinking about being able to trade with a lot of size, putting a lot of risk on, being able to make a ton of money. And so that's why we encourage that. Appreciate